Yo, what's up, everybody? Today is Tuesday, December 13th. Actually, today was a very entertaining day. Very entertaining day, and I think a lot of you probably know what I'm going to be talking about. So, yesterday I did the video, and I pointed out how, kind of the ridiculousness of the whole monetarist approach to investing, if you even want to call it that. I mean, it was like they were wagering on some a boxing match or something like that, some UFC fight. Like if the CPI is over 7.4, you sell. If it's below 7.1, you buy. And today was, a lot of people got schooled. Probably not, because they're not going to change their behavior. But I know you guys are smart, and I know that from just like reading the comments now. I just have to say, like, the comment section in this channel, because I've been doing this a long time. The comment section has really evolved, and I think, I complain a lot about the low viewership, but I think, we have a community here where you guys are really smart and you get stuff. But anyway, so today, the CPI number came in at like 7.1 year over year with the CPI, and the market opened up 800 points. The Dow was up 800 points, at which time I sent out an email to my subscribers saying, look, that's not going to hold. We still have the Fed tomorrow, and more importantly than the Fed, we got that corporate tax train, which is coming on Thursday. And sure enough, we actually went negative for a while on the Dow. Markets closed positive, but way below the initial surge that we saw in the morning. And so, this is a snapshot of behavior. And again, it's a snapshot of completely emotional and out of control behavior, and also a testament to the total just like lack of understanding, this, kind of like embracing a singular variable that they really don't even know about. And it's a fascinating thing to watch. I think you can write, if you're a student, if you're a grad student, I really think you could write like a PhD thesis on this. Just, a behavioral kind of discussion. And the sad part about all this is, as I've mentioned many times in the past, like trillions and trillions of dollars are being managed this way on Wall Street. The scary thing is, just on a side note, that, there's been discussions that have been going on for a long time about eventually privatizing Social Security. And, that's coming from both the left and the right, because it is false belief that Social Security is out of money. And so if they do that, they're just going to hand their money over to these, pros who, this is what they do. They're manic. They're highly emotional. They're ignorant. And they're fucking stupid. I'm sorry. It's just like stupidity. Anyway, so we opened up 800, and what happened? You could see, they jumped in as buyers. Maybe they were buyers, on the long side, thinking, hey, this is what we're looking for. It's a moderation in the inflation rate. Or maybe they were buyers because they got forced liquidated, stopped out of their short position, all right? Leading up to this, I'll just tell you this, that leading up to this report, we have seen, or I've seen put-call ratios, like when you look at the, for example, the equity put-call ratio at the CBOE, or the composite put-call ratio. Somebody sent me that the other day. It's like the highest since 2008, like in the financial crash, when there was really stuff going on in the financial crash. You had you had an unprecedented situation of a total shutdown like of the financial system where the Fed had to react. And it was, I wouldn't even say partially to blame on the Fed. I would say it was largely to blame on the Fed because, at first, and I don't want to get too far off course on this conversation, on this video, but at first what happened was, the Fed would only accept the highest rated collateral, even though all collateral at banks are government approved. Like they can only hold certain collateral, and the Fed was only accepting treasuries and to a limited degree until Bernanke finally figured out, well, we're going to lend open-ended on all collateral because, hey, the government already approved the freaking collateral. You can't be a bank unless you agree to a set of collateral which the government says you can only have. Anyway. So yeah, put-call ratios were way up. Here we are again. They got whipsawed. So they bought at the top. The market came down. I sent out my email. I said, hey man, just like everybody, like chill. We're going to get better buying levels. Certainly we did. Tomorrow is a Social Security payment. And I think that's actually more important than the Fed meeting. The Fed meeting, we're going to get a 50 basis point hike in rates. And we'll see what they say going forward. But I think tomorrow could be, we get a positive day based on that Social Security payment. And then Thursday, the quarterly corporate tax payment kicks in, and that's going to be a drain. As I've been telling you guys, that's going to be a drain. But I have to say that right now, the level of bearishness, at least as expressed in these ratios, like the put-call ratio, it's very high. So I don't know how much downside we really have, but I think you'll be able to buy at lower levels. But it's fascinating. It really, really is, and I hope you're getting some, an education out of this. I hope you're getting enjoyment I certainly am getting a lot of enjoyment out of this to see how these monetarists, this is the problem, folks. Like when you are so, if your views are so close-minded and myopic, and not only myopic, but just like tied to a totally flawed understanding of, the reality of how things work. This is just par for the course. Seeing this kind of whipsaw and these people getting blown out, and then, them trying to rationalize everything and trying to reframe their arguments to explain what happened in the context of their worldview, which is that monetarist view. It's just like, it's fucking insanity. And it's just, look, I always say the best thing for us to do is to take their money. And it doesn't matter if you're taking $100 of their money or $1,000 or $100,000 or $1 million. If you're taking their money, you're doing a great service because they don't deserve to have any. These people are the same as Sam Bankman-Fried. It's just like, his thing was a very rapid implosion. But this is the same thing. They're blowing out people's money over time because, they don't want to change their view. They don't want to try to understand. This is weakness to the nth degree. This is not strength. This is not being a strong person with an independent viewpoint who takes the effort and the time to learn things and to understand things. No, this is sheep. These are sheep just all doing the same thing. And they deserve to go down. They deserve to go down. And this goes up to the highest levels of Wall Street and also of economic policy. I'm sad to say, but that's a fact. Anyway, let me move on from this. Today, interesting. Elon Musk lost his position as the richest man in the world, and you could blame that partially on the decline in Tesla. You could blame that on his investment in Twitter. That's certainly, there's certainly something to be said about those things. But what's interesting to me, and maybe you agree, maybe you don't agree, but the guy who took first place is this French guy named Bernard Arnault. He is the CEO of LVMH, that's Louis Vuitton Moet Hennessy. That is a company that he built over a period of like 50 years. And all he did in that time, I find this to be fascinating, was he just accumulated brands like Louis Vuitton, all these luxury brands. He didn't create anything. There was no innovation. There was no, and that's not a knock on him. I'm just saying it's kind of like an interesting little testament of the times right now. Like, so he owns Louis Vuitton, he owns Moet Hennessy, he owns Bulgari, all these luxury brands, and he built it up over a period of 50 years, acquiring these things. I mean, I had a lot of foresight to think about that. But to me, and I don't know what you guys think, to me it says like, wow. And again, you could blame all this on Musk's, the Tesla decline and Twitter, and I wouldn't argue with you. I would say, yeah, that's a factor. But I mean, to see a guy, the first place guy now is not an innovator, okay? It's not like we had a new tech titan who took first place, or a new industrial titan who took place, or a new commodity titan who took place. It's a guy who just accumulated a portfolio, kind of like Warren Buffett, but he accumulated a portfolio of the ultimate luxury brands. And I think it says to me, like, number one, it's a reflection of the extremes in income inequality right now. Like, people with money, they're paying up. All these luxury brands, they're like so in demand, okay? So in demand. And number two, I think it speaks to the fact of risk aversion. It's kind of like a contrarian indicator, because like somebody who's compiling a whole portfolio of luxury brands, there's not a lot of I don't think there's a lot of risk in that. Like, these brands are always going to be in demand, and people are always going to want them, and they're always going to pay up for them. It's not like you're starting an electric car company or a space exploration company. Not that I'm trying to boost up Elon Musk. I'm not. Or some kind of software company, or you're a commodity producer, which right now, let's say we need commodities, oil, whatever, energy, or some new form of energy. No. So it's very, very interesting to me. I don't know how you guys feel about it, but I think it's kind of like a symbol. It's a sign. I don't think it's going to last very long. I think it's happening now precisely because of, other things that I've been talking about, just the intense level of negativity and pessimism. Like, they're still saying, next year is going to be a huge recession. It's not going to happen. But I will say one thing, and hear me out on this. I just read today from the GOP leadership in the House that their first priority in 2023 is going to be the economy. And the number one issue in their first priority on the economy is balancing the budget. So they could torpedo this whole entire thing. Now, I don't think that's going to happen because the reasons I said yesterday. You got four things they can't go down: Social Security, Medicare, Medicaid, and defense. They're not going to go down. The other things, maybe, but at the same time, don't forget, you got interest payments going up thanks to the Fed. Anyway, that's it. Today was a cool day. All right, folks, take their money. Damn it, take their money. I hope that's why you come to this channel. Bye.